Hello, today is Friday. It is Friday the 13th. Kind of went against all rules today. Never buy on a Friday. Um, it's been an absolutely insane week. We're just going to leave it at that. It's not been fun at times, but hopefully the video yesterday did, whether you're a client or not, help to say, when we are this extremely oversold, usually it does not make sense to panic. I mean, the mood that we had yesterday was very flash crash-ish. Doesn't mean it will not go lower from here. I want to make that very clear. But we did get a nice rebound today, and we'll show you those numbers. Some numbers for you today that I do want to go over. And again, want to reiterate, good job not overreacting. I saw a lot of people panicking, even like to the point where they're like, I'm going to vomit, I'm going to cry. That's okay. It's never fun. But we have to get many new people that are not used to this, where it's usually in a pension. These are normal moves that happens inside of those accounts. You just never paid attention to it. So that's half the battle with investing, is once you start paying attention, you better know what you're doing or you're going to lose your mind. So that's why you have me. But if you're going to start watching it, you got to understand that this is day-to-day price action. We're having literally, here's a stat for you, the smallest S&P 500 plus minus move this week within an intraday span. Again, the smallest span within a day throughout this entire week in one trading day was 4.9%. That is nuts. Okay. So yes, it is very common to see up and down moves that we are seeing in test levels. However, the range is so large, it does not feel good. I mean, yesterday was a 10% down day, and today was like a 9-ish% up day. Now, I want to be real with you and say, usually you get these nice rebound moves higher. Now, I think there could be a little more gas in the tank short term, but we got to be real about this. Long term, these will be buyable and be fine. So for my clients, I will be much more active and try to trade in and out of this stuff. If you are not a client, I don't advise that, because you will probably not do well if you don't know what you're doing. But for clients, I'm going to be trading in and out of here as it tests a little higher. So another interesting fact, overnight, which I was watching, not a fun period here where I was seeing this, it tested as low as 23.94.75, 23.94.75. That means in one day 23.495, and we did close above 1700. The move was basically a 12.99% move off the bottom. You want to talk about a huge swing had you panicked and sold there. Now, it does not mean we will not test there. Would not surprise me if we do, to be honest with you. But a much better situation now than panic selling after a historic down day. So just wanted to kind of show that to you. This is not fun, but I'm going to show it to you anyway because it's a full disclosure. This was the week. The week. I'm going to repeat that. The week. This was the week. Not a fun week at all. It's frustrating. However, you want to know what that week would have been like without today? Look at these numbers. We're going to just look at IWM, which is the Russell 2000. Switch it to the 1 day. So basically, I'm going to go back and forth so you can see it. I'll look at the S&P 500. It would have been basically an 8% down. This is on the week. It would have been basically a 17 to 18% decline had we not had Friday. You would have, had you sold yesterday at the panic, be down 17% instead of, it's not pretty. I'm not trying to, again, we were actually in much better situation than most. We don't actually usually trade indexes. We are much more tactical during these levels because we need to be, so meaning less positions, more indexes, because when you go down this low, you can get spanked if you're just individually trading. It doesn't take much, but we will shortly get back to individual stocks. But for right now, we want to keep it very, very simple and just not miss these moves. And so hope that makes sense. So we showed you that. Now we're going to move on to actual charts. Here is really what we wanted to show you. And hopefully that's okay. I think we're still in the boundaries so you can see it. Okay. Ignore all the lines. I'm trying to make this as simple as possible. This is the S&P 500 over the last year. Here was the range from May to October that we were in. It's basically a 7.8% span that we tested for months. It was not fun. Usually good things happen after this. And don't be surprised if the same stinking thing happens. Up, down, up, down. It'll drive you nuts. People thought we were in a recession right here. Saying, hey, we can't get out of this range. But historically, usually you break out of those, which we did. Fortunately, I did sell about half at the 23.8 or the 33.80, which again, I'm very emotional because I know many other advisors that will never sell. It's a different philosophy. Stick to your advisor's advice, but that is not how I trade. I'm going to be realistic and buy at oversold levels, which or overbought levels. Now we are extreme oversold. Getting pretty realistic here, so we might get to 50 RSI and probably go down again. So don't be surprised here, but here are the levels we're watching. Again, we were as low as overnight. It's not going to show you on this chart, but 23.94. Not even on the chart, guys. That's how low we were overnight. I want you to understand that. I was watching that. Not a fun overnight system. But we did close at the 27.11 level. The futures after the close tested right down to 26.63. So this is going to be a grind. We could go a little higher. Maybe we do test as high as, basically the 28.35. But here are the levels I'm watching. I hope this helps you, whether you're a client or not. Happy to help. But please be smart. Like, if you're not a client, don't be asking for stock picks. You're not going to get that from me. But I'm trying to give a general understanding of levels that I watch. I'm not trading this index, but it helps you understand. It's an educational thing. So hopefully that is helpful. Look at the volume the last few days. Mercy. That is crazy. So keep it simple. It's a good close. Might go a little higher. You might see a FOMO if you're missing out. Rally here a little bit. I will be probably backing off on the way up because it could get much worse, to be honest with you. The QQQ. We want to see this quickly get back to the 200-day moving average. It might test that. But that's a nice day. We actually bought some of that into the close yesterday, which was nice. TLT. Some people are like, with this volatility, you would think bonds would be doing really, really well. But the thing is, when you get into scary recession talk, a lot of these sell off as well. And that is the truth. I mean, 180, the peak, 179.70, to it closed at one. Guys, that's a huge stinking move in bonds. I warned you here. Like, this is great if you're there. Get the heck out. It doesn't matter whether the market could go up or down at that point. That is extreme. Okay, this is the odds of the oscillator, the relative strength index. It helps you evaluate and keep things rational. Gold. Many would have expected gold to do exceptionally well this week. Again, usually when there is recession talk, everything sells off. It doesn't matter what you're in. Sure, gold and bonds did better and they help hedge for a little bit, but this too did crater. Now, it truthfully is probably to a level where it might get bought as a hedge. But guys, 159.37 to a very low level of around 141 and closed at 143. That's huge. Okay, so giving you the full perspective. You got to be careful. Don't just assume. The market doesn't always make sense. The oscillator, which I think is as of yesterday. So extreme levels. We know this. And the advanced decline, which is as in the end of today, actually, still at extreme levels. So might go a little bit higher here, but watch yourself. Don't get overly bullish or bearish. The speech today was encouraging. Not necessarily the speech itself, but the actions that were taken, and to see other CEOs backing the plan. So that was encouraging. The market responded. The market responded actually after the president stopped talking. Not political, it's just the reality. Again, I'm not going there, but it is the truth. That is what happened. But I hope this helps. Again, I'm going to close on this to reiterate the levels. Okay, these are the levels I am watching. The next one, the key level right here, first of all, 2660 to 2720. It is going to test that like crazy. Monday is not going to be fun. It might go as high as the 2800. I will probably start slowly getting the heck out because this is not going to be a V up, guys. It's going to be a grind. So I want you to understand that. If you have an advisor that is saying buy and hold, that's perfectly fine. Stick to your plan. That is not how I will be trading. Hope this helps. Good job keeping your emotions. I know many of you were panicking. That usually means buy, especially after yesterday. But be realistic at these levels. Have a great weekend. It's nice in Ohio. The sun is out in Ohio. God bless America. Have a great weekend. Get some rest. I know I need it. I smell like crap. I love you all. Thanks again. Bye.